You're looking at a live shot right now of Tel Aviv, Israel. Well, right now, the IDF there says it has identified missiles launched from Iran into Israel's airspace, saying, quote, all of Israel right now is under fire. Here is what we know right now. Just after 4 a.m. in Tehran, more than 200 Israeli jets began a series of air raid operations targeting at least 100 different locations, multiple waves of attacks that seemed to target specifically ballistic missile sites, as well as the city of Natanz, which, of course, is a core part of Iran's nuclear program. That is where they have their underground enrichment site. Iran retaliated with drone strikes earlier in the day. And just within the past hour, what you're looking at there are projectiles said to have come from Iran into Israeli airspace. You've seen crude oil prices spike at one point up about 13 to 14% on the day. Spot gold hitting a record high. The VIX, which of course tracks expectations for stock market volatility, that spiked to the most in 2 months. And right now, you're looking at an S&P 500 and the rest of U.S. stocks hitting lows for the day, the week, and the month. Romain Bostic here alongside Scarlett Fu. We have a lot to break down here as we take you to the closing bells.
Yeah, markets unsettled here as tensions in the Middle East continue to escalate. We'll cover it from all different angles.
Absolutely here. And I believe we want to go right now straight to John Bolton, the former United Nations ambassador, of course, an expert on Iran and instrumental, of course, in getting the U.S. to pull out of that Iran nuclear deal back in 2018. Ambassador, great to have you here on the program. I do want to ask you here about the targeting of the various sites and what we know about Iran's nuclear capabilities, and more specifically, the location of those capabilities.
Right. Well, at least what we know, and nobody should be completely confident we know everything, was that they had 18 separate sites, one of which the Israelis largely destroyed last October, retaliating for an Iranian ballistic missile attack on Israel. So the targets that I've seen mentioned in the press cover most of those sites. We'll see what happens in subsequent days. But the Israelis are certainly going after key elements of the program. The Natanz facility attacked last night, as you mentioned. The Esfahan facility, very important, not well known, but very important. It's the place where they take uranium in a solid form and turn it into uranium in a gas form, uranium hexafluoride, which you have to do to enrich. So if you can't convert uranium from uranium oxide, yellowcake, to uranium hexafluoride, you can't spin it in centrifuges. That was attacked last night, very important. We don't know fully, obviously, what the damage is, and we expect that, according to press reports, this could continue for as long as 2 weeks.
Yes, and they have said that. We should also point out, again, we do not know the damage. The Iranians have weighed in, saying that they will actually still continue their nuclear program. And I guess that gets to the question, Ambassador, of whether Israel can truly neutralize this nuclear program. I mean, there's been a lot of talk about Natanz and just how deep underground that is, the way that it's protected by mountains. I mean, are there actual military capabilities to truly do away with it?
Look, I don't think there's any doubt that Israel, apart from the enrichment site at Fordo, can destroy any of these facilities. Most of them are above ground. We could do a better job, and it's one reason why we should be working with the Israelis on this with our bunker buster capability. But I think they can effectively destroy Natanz. Fordo is under a mountain. So the Israelis can close the entry shafts and the air shafts. And, if you can't breathe, it's pretty tough to enrich uranium. The things we don't know, though, are whether Iran is renting or has nuclear facilities in North Korea, which is obviously beyond the scope of Israel's capabilities. But I'm sure the Israelis are going to go after these 17 remaining known sites during the course of their offensive and try and take them out. And it is possible for them to do it.
Mr. Ambassador, my question to you now is, based on your best understanding, why now? Israeli officials said that the strike was preemptive. It has been months since the last round of Iran or Israel strikes. So is this Israel using the element of surprise to its advantage, or is there, do you think, something specific that prompted this?
Well, it was reported in the Israeli press today that Netanyahu said he had intended to do this in April. And the thing that prevented him was Trump announcing he was sending real estate dealer Steve Witkoff off to negotiate with the Iranians. And that explains the 2 months delay. I think the Israelis really waited to the last possible minute, maybe even beyond the last minute, because they worried that Iran was as close as they could permit to actually having a nuclear weapons capability. you're seeing in the skies over Israel right now, Iranian ballistic missiles coming in, most being intercepted. And no one can know whether under the nose cone of one or more of those ballistic missiles is a nuclear weapon. And Israel doesn't want to live under that threat, and we wouldn't either.
The U.S. has made clear that it was not involved in these strikes. Does that matter when it comes to retaliation from Iran?
Well, I think what we're seeing today is a significant U.S. effort to assist Israel, and there were elements of U.S. forces involved last night in responding to the drone attack this morning, actually in Middle East time. F-15 stationed in Jordan and other capabilities we have. I think we'll be strengthening our forces there because of our deployed troops at the various bases in the Gulf, and hopefully to help out the Gulf Arab allies as well. It's very interesting that last night, I think Secretary of State Rubio said Israel had acted unilaterally, and there was no statement of support for Israel in his remarks. Whereas today, President Trump has been saying that we support Israel and this attack will boost the stock market ultimately. So it's an interesting shift in the administration view.
I am curious as we sort of move forward with the next steps in all this. And I do want to go back, particularly with your time serving the administrations, and specifically that speech that Netanyahu gave back before the UN, I believe in 2012, in the fall of 2012. And everyone knows he held up that picture of the bomb. And I know a lot of people made fun of him. But underneath the surface, there was a lot of substance to what he was talking about how far along the Iranians, in his view, were with their nuclear program. And I do wonder if you can reflect back on that day and answer the question as to whether Netanyahu was indeed right.
Well, I think he was. The negotiations, serious negotiations, were started by the Europeans with Iran in 2003. And the conditions they were willing to accept were that Iran could have a civil nuclear power program, but it could not have the capacity to enrich uranium, that they would buy fuel rods from the outside world, and then they would send them back after the fuel had gone through the reactor. The Iranians insisted for years that they needed to have a domestic uranium enrichment capability, which the Obama administration ultimately conceded in the 2015 deal. That was the fatal mistake, because that is what gives Iran the ability to enrich uranium to weapons grade. People say, oh, it's such a huge distance between reactor grade uranium and weapons grade uranium in terms of the enrichment process. In terms of the actual physical energy expended, it's very close. You have enriched to reactor grade. You've done 70% of the work you need to get to weapons grade.
Yeah.
That we never should have permitted the Iranians to have.
Where we stand right now with the military action, and I assume this takes any real chance of a true nuclear deal off the table, no matter what the president says. It raises the question as to what type of fuel is there, how weaponized it has become, and what control, or I should say, who would have control of that if this military conflict escalates?
Well, it depends on what damage the Israelis inflict. At the uranium conversion facility at Esfahan, there's a lot of radioactive material, not enriched to at all at that point. And that could be scattered around. I assume that the Iranians will continue, the Iranian government will continue to control it. But honestly, if for example, the regime in Tehran fell, I would hope that the U.S. and others could go in and under a new regime and take control of all of that and move it to Oak Ridge, Tennessee. That's where we stored the Libyan nuclear weapons program when they gave it up in 2003 and 2004. That's where we should put the Iranian nuclear weapons program if opportunity comes to us.
All right. John Bolton, the former U.S. ambassador to the United Nations, thank you so much for joining us today. The conflict between Israel and Iran rattling the global energy markets, with one point of leverage being the Strait of Hormuz. This is a critical waterway that connects the Persian Gulf with the Gulf of Oman and the Indian Ocean, making it the only sea passage for oil tankers to reach Asia from the Middle East. I want to bring in now Rebecca Babin, senior energy trader at CIBC Private Wealth, and she joins us now with her analysis. We'll get to the Strait of Hormuz and Iran's prospect for disrupting shipping in a moment. But I want to get from you, first of all, with oil prices up as much as 14%, WTI now off of those highs, what are traders pricing in to this gain today?
So leading up to this event, I would say up until 2 weeks ago, we really didn't have any geopolitical risk premium priced into crude oil. So we had basically kind of believed the kind of notion that the Iranian negotiations might kind of stall and we wouldn't see maximum pressure sanctions, and this was just going to be a slow play. So what we're seeing right now is twofold. We're seeing the potential that Iranian barrels are impacted either through sanctions or through an attack by Israel on Iranian energy infrastructure. That is a total of about 1.6 to 2 million barrels a day of potential supply loss. So if you kind of use the back of the envelope math, 1 million barrels a day of supply loss generally leads to about $10 in crude oil. So I think what we've seen is kind of that million barrel kind of swing number of what's being priced into geopolitical risk premium into crude over the past several weeks as we've moved from kind of 65 to, let's call it 75 here. So I think that's the first and foremost thing that the market's focused on, real actual potential supply loss coming out of Iran, whether it comes from sanctions, which is going to be a slower process, or whether it comes very quickly from a strike on energy infrastructure. I think the second thing the market is really focused on is the fundamentals of the market. So the reason we're not higher than where we are right now is that the market sees a surplus building in the second half of this year of something around 800,000 to 1 million barrels. As demand starts to weaken and non-OPEC supply increases. So looking at this kind of balance and saying, okay, well, we might lose that surplus that we thought was coming and we're going to be in a balanced market situation, we kind of need to reevaluate where we put the back end of the curve. So I think that's the second thing the market's really grappling with right now is how the balances in the second half play out.
What are the options if oil prices remain elevated at these levels? Do you see the U.S., for instance, tapping the Strategic Petroleum Reserve?
Great question. So that is an option. I don't think at these prices we will see a tap of the SPR simply because it's been drawn down pretty significantly when Russia invaded Ukraine. I mean, it's been built back up off the lows, but I don't think we will see that. I think instead we will see the U.S. try to lean on OPEC Plus, who has an ample amount of spare capacity to bring back their production a little bit more quickly. They have started unwinding 2.2 million barrels of production cuts back into the market. They've done 3 kind of tranches of 400,000 barrels. They definitely have spare capacity they could bring on. Now, the caveat here is they need to tread very carefully. They are taking a very neutral stance in this conflict and bringing back barrels that kind of look like they might be aiding the cause of Israel or the U.S. might not be appropriate unless there's a real physical loss. But I do think that other buffer we see is not just the SPR, but the spare capacity in OPEC. They are naturally starting to unwind. If they continue on this trajectory, it does offer a buffer.
I am curious about some of the other nations, particularly the Saudis. Obviously, I mean, they are the de facto leaders of OPEC Plus right now. If this conflict does drag on, and if you believe the words of some of the Israeli ministers, that this is an operation that could last days, even weeks, is there a sense that the Saudis would, and more importantly, would actually have the leverage to dramatically alter the production landscape?
So they definitely have the ability to alter the production landscape. Absolutely. They could bring back barrels very quickly. They have spare capacity. They're producing 9 million. I think they could bring it to 10 in a matter of weeks, maybe 9.5 in a matter of weeks. The bigger question is their desire to do so. OPEC released a statement today from the Secretary General saying they are not going to respond unless there's an actual supply disruption. And they actually criticized the IEA for indicating that maybe we could use the SPR for these situations, saying that we've misused it in the past, citing the example with Russia, Ukraine, and then it sends fear through the market. And again, Saudi Arabia has had like a little détente with Iran since 2023. And that relationship is very different than it was in 2019. So I actually don't think it's their ability that will restrain them. It's more of the political consideration. That doesn't mean they won't bring barrels back. But I don't think they're going to come in and just bring 1 million barrels back. I think they're going to continue on this tranched kind of every month, bringing back the 400,000 barrels a day and revisiting the next 1.6 million barrels they had reduced that's supposed to come back in 2026,
Yeah.
seeing if they can accelerate that. So
Yeah.
there's options, but they're going to tread very carefully.
All right, we're in conversation right now with Rebecca Babin over at CIBC. I just want to bring a few headlines to our viewers right now. We are hearing from the Israeli Defense Minister, Katz, saying that Iran, quote, crossed red lines by firing into civilian areas. And according to him, he says that they will, quote, ensure the Ayatollah regime pays a heavy price. We should also point out for all of our viewers here, if you need to break away from this broadcast, we do have live coverage on Bloomberg.com as well as on the Bloomberg terminal, a live blog that is tracking this in every step of the way. Rebecca is still with us here. And Rebecca, this gets to this idea of diplomacy and more importantly, the idea of how all of these tankers, all of these companies out there and these shippers navigate what, at least for right now, is unpredictability. This isn't, of course, just about the Straits of Hormuz, but it's about all the other shipping lanes. Shipping lanes, we should point out, there already were disrupted by the war in Ukraine, by tariff uncertainty, as well as other skirmishes involving the conflict in Gaza. Does that have to also be altered further, given what we've learned so far today?
Romaine, this is a great point, and I think it's very underappreciated in the market right now. This absolutely does alter all the rest of shipping lanes, whether it's the Red Sea, whether it's that Iran doesn't close the Strait of Hormuz, but maybe the Houthis start to lay some mines in different shipping channels. We need to be very careful here that we don't slip into complacency. The Iran is significantly weakened, as we know, but the Houthis are still active and they're still pretty nimble. I do think we will continue to see shipping costs rise, and I think that'll add a kind of persistent $2 to $3 to crude prices over the duration of this conflict and maybe longer. So I think that's underappreciated by the market right now because we're just talking about how many barrels and where. But I think that could have a lasting impact, and that's an important thing to watch as we move forward.
Rebecca, always a pleasure. Thank you so much. The perfect guest on a day like today. Rebecca Babin is senior energy trader at CIBC Private Wealth. All right, we've talked about oil prices. We've talked about the Strait of Hormuz and oil tankers. Let's broaden out our conversation now from the energy markets to the broader markets, including equities, with Walter Zimmerman. He is chief technical strategist at TP ICAP. Walter, good speaking with you. You're joining us by phone right now, and I'm curious, when you look at the charts, what kind of position were they in before the news crossed overnight about these latest attacks?
Well, Brent crude oil, let's take that. That's been in a downtrend channel since 2023. It peaked at 97.69 in September of 2023, and the most recent low was 58.40 in April of 2025. It's been a very neat, very precise, very well-behaved downtrend channel, and last night's high hit the downtrend channel resistance line exactly, and then the price retreated. So technically, the entire petroleum complex is still in a downtrend channel. And all it did yesterday was bump up against the downtrend channel resistance line. Now, if all these markets take out last night's highs, that will be a different story. But right now, the market is saying, well, I'm still in a downtrend channel. I need more than this to break out to the upside.
I am curious, Walter, when we talk about the idea of heading into a weekend, so you're going to have a little bit of a gap in trading once we get through today, basically until Sunday morning, more or less, at least based on U.S. time. Does that actually affect some of those trends when you have that sort of pause and the human beings, and for that matter, the algorithms, can take a breather? Or is it just simply a resumption of where we might have been today?
If it's going to have any effect, it's going to be bearish because people are going to come in Monday, and if the world hasn't ended, they're going to look at where they bought, they're going to look at this downtrend channel, and they're going to say, well, maybe I bought too early. A pause tends to simmer things down a little bit, tends to calm things, not aggravate things.
All right, Walter, I have to leave it there. Really appreciate you jumping on for us. Legendary technical strategist there, Walter Zimmerman, over at TP ICAP. And Scarlett, we talk about a market that is trying to take this in stride, but you see some of the jitters, particularly in the equity space. Of course, we saw the huge spike in oil as well.
Yeah, and of course, I think you made a good point. It is Friday, so we are seeing a little bit of a weakness heading into the close because no one wants to be long right now.
Airline stocks really taking it on the chin today. We're going to cover that when we come back after the break. This is Bloomberg. We continue to keep an eye on the developments going on right now in Israel and in Iran, a trade of projectiles coming from both nations into the others. We're now hearing from the Israeli Prime Minister Benjamin Netanyahu in a post on the social media platform X, saying that more action will be taken against Iran. This has had a big impact on oil, and it's having a big impact on airline stocks. Moving lower here on the day, Stephen Trent, analyst over at Citi, joins us right now to talk a little bit more about this. And Stephen, when we talk about airlines, U.S.-based airlines, obviously not a huge amount of travel exposure to that region, but they, of course, have a huge amount of exposure when it comes to oil prices.
Yeah, absolutely, Romain, and thank you for having me on. So I think the two sides of the fence you want to look at in these cases. One, what kind of volume impact you have in terms of passenger flow, and two, what's the ultimate impact on seat mile cost. So certainly looking at the first side of the fence, you do have varied impacts in terms of what it means for flow to the region. Maybe United Airlines might be a touch more exposed than others, but even in the United's case, it's not a large piece of the pie. You know, in terms of the oil price side and the flow through to jet fuel kerosene, that really depends whether this ends up being a hiccup or whether it ends up being a big impact in terms of oil supply. Certainly, I'm not the oil person at the firm, but from what I can see, what I know so far, today's move looks more technical, versus a big supply shock, but that's where we stand today, at least for now.
Yeah, we were just talking with a technical analyst who said that oil is very much still in a downtrend over the longer term. Stephen, which of the airlines, based on what you know, hedge against spikes in oil prices?
Yeah, so the airlines really got rid of hedging sort of after the credit crunch for the most part. And if you look back to 2008, 2009 results, sort of 1/3 of the loss was because of hedging. Southwest has just gotten rid of its program. It still has some contracts to roll off. So maybe 40 some odd % this year is still hedged. You look at Delta Airlines, they own the Trainer refinery. So they have a natural hedge, which often works out to give them a couple of pennies of gain per gallon, might be a little bigger in this case, depending on how long this oil spike lasts.
There was a lot of discussion, even prior to the latest skirmishes in the Middle East, about the health of the airline industry, whether we were going to see softness in travel trends heading into this summer. I am wondering what your general outlook is right now for that space, and whether what's going on in the Middle East could have, at least on the longer term, ramifications.
Yeah, absolutely. So answering the second piece of the question first, I am less concerned about the ramifications from that region, as international long haul and international generally still looks very good. When one looks at the softness that we've seen thus far this year, which started with the Dodge and tariff concerns and what have you, has mostly been on domestic mainline. So when we think about the outlook for the next couple of months, certainly I think the entire sector is looking for the dust to settle in terms of uncertainty around tariffs, around demand, maybe around oil prices today, even though this looks and smells more technical and short term. So I think as we move forward, we are more constructive on the network airlines. Delta, United, American, Alaska, those four last year collectively generated something close to $10 billion in free cash flow. And we take a less sanguine view on the discount airlines because they have much less firepower to raise fares under these circumstances.
Right. Stephen, really appreciate you joining us. Stephen Trent is equity analyst and managing director over at Citi, giving us an overview of how the airlines are affected. And Romain, I look at the Jets ETF, down for a third day now at the lowest in about 5 weeks.
Yeah, absolutely. And it's not always just about the direct connection. It's also about a lot of the volatility that gets stirred up as well. All right, we're going to continue covering this. And just a reminder, you can continue following our live blog on Bloomberg.com, as well as on the Bloomberg terminal. When we come back, we're going to talk about M&A and a lot of the uncertainty and disruptions to that industry because of everything going on around the world. This is The Close on Bloomberg. 3:30 p.m. here in New York City. This is the countdown to the close. I'm Romaine Bostick.
And I'm Scarlett Fu. We talk about what's going on with Israel and Iran and how the markets were kind of shocked from a little bit of complacency because there had been, it was pretty quiet on this front for a couple of months.
Yeah.
But even with the declines that we're seeing in stocks, it feels like there's some sense that this will go on for a while. And so there's a little bit of recognized restraint on both countries' parts.
And it's kind of interesting, too, because you talk about just how disruptive policies coming out of Washington, geopolitics overall have been to financial markets. Probably, I think, the tightest connection we've seen between Washington and Wall Street in several years. And we saw a shutdown to a certain extent and a lot of deal-making activity, obviously a lot of IPOs, because people were kind of on the sidelines. And you were right. Look, the last couple of weeks, we were talking about how many IPOs were finally coming in.
Resurgence.
New IPOs. People were finally getting comfortable with the chaos. And then, of course, you come into today and see what happened overnight there in the Middle East.
And this is a chart that shows how deal-making really hasn't surpassed what we saw last year. It's just a little bit higher. But coming into this year, everyone was looking for a big, big recovery because there would be clarity. There was a unified government that hasn't exactly materialized. Deal-making is on hold. M&A activity is largely down. The deals that were supposed to be driven by Trump's presidency, we're still waiting for it to happen. So joining us now to discuss is Bill Curtin. He's global head of M&A at Hogan Lovells. Bill, good to speak with you.
Good to see you,
Trump's unpredictability, especially when it comes to tariffs, is a big, big deterrent for deal-making. It's kind of unquantifiable, but it's there. It hangs over everyone. What about geopolitics, and in this case, the conflict in the Middle East? How big a factor is that in companies' willingness to move forward with deals that they already have been eyeing and are ready to move on?
Well, Scarlett, Romaine, is very, very significant. So we've been on a roller coaster in 2025. Just as Scarlett said, Romaine, we started the year with euphoria, a lot of excitement, expecting deregulation, expecting a reduction in corporate income tax, ready to unlock even more M&A deal-making trends potential. But then we ran into April 2nd, Liberation Day, and we had our dip in the roller coaster and a significant dip on the M&A front. We fell, actually, Scarlett and Romaine, to the lowest volume of deal-making in 20 years during the month of April. So it's a very significant decline and adverse reaction. But then we lifted ourselves back up, just as Scarlett showed us on the chart, in May, and we regained our momentum and our confidence in the month of May, now only to confront not geopolitical tension, but potentially a geopolitical crisis. And that's a very different thing. What we had in Gaza, as horrific as it was, what we have in Ukraine with the Russian invasion, as awful as that is, those were geopolitical tensions. They became understood, they were being addressed, and now overnight last night we enter into the realm of a potential geopolitical crisis, which really can even further chill deal-making.
Right, tensions maybe you can price in, but conflict brings in other players as well. And as you think about how this conflict could widen, what does that mean for deal-making in parts of the world like Asia or Europe?
When I started my career, it was something of a novelty to say that you were a cross-border or an international deal maker. Now everybody who's doing deals is an international deal maker because there's so few businesses that you cover so well at Bloomberg that are just located in one country. They're international, they're multi-jurisdictional. That means the deal making becomes that as well. And when the international arena becomes susceptible, or what I say stands on an unstable base, sort of like when you go to the gym and the trainer makes you do the workout on the unstable base, it's a lot harder. It's much harder for us to transact with confidence, clarity, predictability. And so then you see the abatement occur.
So what does get transacted in this type of environment?
Opportunities, right? There's still tremendous opportunities. And I'm so glad, Romaine, that you asked me about that because I'm actually quite optimistic about 2026.
Okay. We're already looking ahead to 2026?
I'm already looking ahead because in the C-suites now, people are getting everything ready for once we get more stability and predictability. So I actually see a 2026 that has a radiant air to it, that has actually a symphonic opportunity for M&A because think about it, unemployment's in check. Inflation is broadly in check, right? We had a good news this week, as you reported, with a 2.1%, right? And we've got credit available. We've got private equity with tremendous capability, and we have strategics who have to transform in this new AI world. So all the members of the symphony are ready. We just need the conductor to say, things are stable enough, please go play.
This gets to the question, and I know it's hard to sort of pontificate about where we go, but we came into this year, as Scarlett said at the top of this segment, with a lot of optimism for what we're going to see with M&A. And then Trump kind of came in, kind of started, knocking things around, and people were like, okay, let's step back. At the same time, given what you do at Hogan, that the idea is that there still have to be people calling you, looking for advice, how to navigate tariffs, how to navigate the geopolitical issues, and now, of course, military and warfare issues as well.
That's absolutely right, Romain, because businesses in today's economic world, they cannot succeed organically. They need to engage in non-organic activity. They have to go to places, draw upon R&D, find technologies, enhance their workforces, and the way that they do that, that's why M&A is so important, is through M&A. It drives the global economy for us. And so those deals are still being looked at, Romain.
Yeah.
They're still being considered. They're just not quite ready to unlock them.
But also, how do you value that? I mean, because that's the other thing. I mean, someone can look and say, okay, this is strategically makes sense, but then it's sort of like, am I paying too much for it? If the world is going to pot, maybe I wait, 6 months, or maybe I don't. I don't know.
You're right, because think about it, we value these deals, right? And we have to decide, well, where are U.S. and China going to end up out of Lancaster House, where they're having their tariff discussions? Where's that going to settle out, actually? And how do we price that into an M&A deal, right? Is it going to be something that is reset significantly in our favor? We have to think about what will the Senate do with the big, beautiful bill, right? And I'm not speaking about myself. So we have to think about what happens there, right? Is that going to get through the Senate? It got through the House by 1 vote. So it's not certain to get through, or at least in its current shape. And pricing that through, Romain, is a complex endeavor for my dear investment banker friends.
So, Bill, when you look at it overall, in what sectors is consolidation, is deal-making overdue and therefore inevitable, no matter what happens in Washington, no matter what happens in the Middle East and the larger world?
Well, Scarlett, people ask me about the most important sectors. We have 14 sectors we concentrate on at Hogan Lovells. And I always respond to that question by saying, but there's really only one sector. Whether it's healthcare or financial institutions or automotive, there's really one sector, and it's technology, because it runs through every one of these sectors. And so what we're going to see continue to happen are deals in the technology sector where companies cannot get to a place that they wish to get to as quickly as they want, just organically. They're going to need help through joint ventures, strategic investments, acquisitions, and the like. And so any of the sectors that is where there's a technology-centric component, deal making will occur.
Bill, really appreciate it. We have to leave it there. Bill Curtin, Global Head of M&A over at Hogan Lovells, basically the man you call in Washington when you're trying to get a deal done. We are getting some additional headlines, Scarlett, on the situation developing in the Middle East. We're going to start with Iran. Iran apparently speaking with Indian officials on a call, saying that the diplomatic process on nuclear talks had been ongoing with the U.S., but the Israeli attack derailed that diplomacy. Iran also calling on the Islamic Republic says that the call on the Islamic Republic for restraint is, in their words, unfounded, and that the response to Israel will be firm and decisive, Scarlett. So then we'll get a little bit of a verbal tit for tat right now. And we'll see if that verbal tit for tat turns into more military tit for tat.
For now, we're not seeing much movement in oil prices. They remain higher by about 7.9% for WTI at 73.38. And U.S. equities taking a little bit of a leg up in that they're paring some of their losses, but we're still looking at 1% plus declines on the S&P 500. All
right, we're going to take a closer look at some of the big movers on the day. Oil up, airlines down, the NASDAQ 100 near session lows. This is The Close on Bloomberg. All right, as we count you down to the closing bells, 3:40 here in New York, a little after 11 p.m. in Tehran and after 10 p.m. in Tel Aviv. A close eye on the developments in the Middle East having a big impact on stocks and sectors here in the U.S. Energy up on the day, airlines and hotels down. Jess Menton helps to lead our cross-asset coverage, joins us here in Studio 2. And Jess, we were talking the other day about the tight range that the S&P 500 had been. Not quite a breakout, but probably one of the more significant declines we've seen in the last few sessions.
That's right. So actually 11 of the last 12 sessions through yesterday, the S&P 500 hadn't exceeded a swing of about 60 basis points in either direction. And usually June, it's the third worst month of the year, but it's not really as turbulent as when you think of September or August. It's more of just a boring month as the calendar flips over to the summertime. But then you have this, because a lot of people I were talking to were thinking, okay, the catalyst to move things would be next week when you hear Powell. Obviously, the Fed's not expected to move rates, but it's the signaling and the dots in his rhetoric there. But then you have when something like this happens in the Middle East, then you get that jolt. And then, of course, the VIX back above 20 after it had been below that. But still, it's only the highest it's been since about late May. And I was looking at the cost of hedging as well, if you're looking at the SPY.
Has that gone up?
Trying to bet. It's gone a little bit higher. So it's the highest it's been also since maybe mid to late May, but it's still well off where it had been in early April. So that shows you that there's not a ton of fear out there, but it's getting a little bit more of people betting about whether or not you'd see a decline over the next month. That cost of hedging is beginning to be a little bit more expensive now.
When you look at the sectors, what jumps out immediately is the fact that energy is the only sector out of 11 in the S&P 500 that's in the green, which makes sense given how much oil prices are rising. But is there a sense that people are going to be defensively positioned for this, or is it, you know what, we'll just sit back and wait and see how this all shakes out?
Well, at the opening bell, and then it was interesting because things kind of shifted, but then they're back to the way they were. So it was more of the riskiest corners of the market that were selling off this morning, pre-market at the opening bell. So you'd think of small cap stocks or weak balance sheet stocks or non-profitable tech. Even Tesla had been down. Then by the time it was midday, Tesla was the only one that was leading gains in the Magnificent Seven. And then when you think about what's happening with energy, obviously you have the oil field service providers like a Halliburton that's higher. You have Exxon and Chevron with the major oil companies. But then also, of course, you were mentioning travel as well that had been down. So that's more kind of across the board right now with that sector.
Yeah, two biggest gainers, at least in terms of point contribution, Oracle and Tesla in the S&P 500, and big drags pretty much from everything else. I am curious about heading into the weekend. We talk a lot about when you have these events on a Friday, how do investors position, particularly heading into the closing bell? Do they sell off, pack everything up, and then wait for what happens over the weekend and then re-up on Monday? What typically happens in situations like this?
Well, usually, especially this year, it was the opposite of last year. So when we came into this year with DeepSeek and the tariff concerns over the weekends, Fridays and Mondays ended up being really bad for the S&P 500, that trend. But then once we saw that rebound over the last 2 months, that kind of shifted things. So now people are wondering, will we begin to see that shift again? Because even if you're looking at implied moves over the next month, originally coming into today, it had been a lot lower, like all below 1%, just given the VIX had been below 20. Now, does that change? Because right now, through yesterday, the average move for the Fed decision next week was about 70 basis points in either direction. That's the lowest in quite some time based on Piper's data. So does that shift today once they do the straddles after the close?
Yeah, that press conference is going to be interesting next Wednesday.
Jess Menton, always a pleasure. Thank you so much. And this just gets to the idea of how much has happened this week. I mean, we're focused on what's going on in the Middle East right now, but we started the week, remember, with China-U.S. trade talks.
China-U.S. trade talks.
And they made progress there.
Progressing. You had some relatively decent earnings.
Inflation
encouraging
that
economic
wasn't
data.
Alarming at all.
Yeah, and now this. And of course, Powell will be asked a million times what he thinks about it, and he'll dodge the question a million times.
Yeah, well, we know the president's also hammering him to cut interest rates by 1 percentage point, regardless.
Yeah. We should just point out real quickly, the Energy Secretary of the United States on a post on X saying they're monitoring the situation and the potential impacts on the global energy supply.
All right, coming up, we're going to take you to the closing bell with Jason Pride, Chief of Investment Strategy and Research at Glenmede. This is The Close.
The things we don't know, though, are whether Iran is renting or has nuclear facilities in North Korea, which is obviously beyond the scope of Israel's capabilities.
John Bolton, former U.S. National Security Advisor, former ambassador, and of course a key architect of the dismantling of that Iran-U.S. nuclear deal. And of course, that is the focus today as we count you down to the close. Romaine Bostick here alongside Scarlett Fu. I don't know where you were last night when those headlines started crossing, but it was pretty obvious this was going to have an impact on the markets.
Yeah, we saw oil prices spike immediately. And he mentioned the things that we don't know. There's a lot we don't know, and that is perhaps why stocks have revisited their lows of the session. The S&P 500 now down 1.2% on the day. And of course, the only group in the S&P that is higher are energy stocks, and that's as WTI jumps to as high as $77 a barrel following the initial Israeli airstrikes. Investors were looking for safety, kind of, and usually that would mean remain lower bond yields, but that's not happening here because everyone's worried about the inflation ramifications.
I thought that was kind of interesting, too, to see yields actually moving higher on the day. So basically, you talk about the selling that you're seeing in that space. We should point out when we talk about the defensive nature and you see the strong bid into the Swiss franc and the gold and some of the other things. So there's a defensive nature, but kind of curious to see how the market is kind of having to assess a lot of different risks all at once.
It just joins the list, right?
Absolutely. Well, let's see what Jason Pride thinks about that. He's Chief of investment strategy and research at Glenmede. He joins us now to count us down to the closing bells. And I do want to start there with this idea, Jason, of kind of this pile up of risk or potential risk, whether you're worried about trade, whether you're worried about inflation, a slowing economy, geopolitics. First it was, what was going on in Ukraine, then Gaza, and now what's going on with Iran. Stack that all up for us, Jason. Is that a situation as an investor where you do something, or is that a situation as an investor where maybe you just stand pat and wait to see how it all shakes out?
So I think it depends on the type of risk that you're talking about and what your real read through is on that risk. So a number of those risks are what I would kind of consider to be kind of exogenous factors that really any investor, and I would say the vast majority of investors, have very little capability of predicting what exactly is going to happen with a Israel-Iran conflict. And if you try to convince yourself that you actually have an edge in that flow of news, you're probably delusional on that note. So generally speaking, from a strategy perspective, on those items, it's better to kind of stay away and not necessarily make any big shifts on that basis. Having said that, there are other things that are really in the works. The tariff policy we've been through, the potential inflationary impacts, things like that we have to take into account and think through. And we think we can kind of start seeing some read through on some of those items, actually possibly even starting to get a little bit more positive into 2026.
The thing is, when you look at what's going on in the Middle East, Israeli Prime Minister Benjamin Netanyahu posting on X that more action will be taken against Iran. It very much feels like both sides, both countries are holding their fire a little bit, and this is going to be something that's going to drag on for a while. It's not kind of the one and done episode that we saw a couple of months ago. What does that mean for investor psychology? How does that affect the way investors make decisions?
Generally speaking, what we'll see with the equity market and what I was starting to talk about a second ago is kind of the longer term perspective on a near term perspective. And investors generally will get a little bit defensive in the face of rising risks. And that's generally what we're seeing today. We started the day down almost 2%. We've kind of come back around at the tail end of the day down 1.5% to 2% for the markets. That's a reasonable reaction to a perceived risk that's sitting out there. And investors need to kind of recognize where those risks sits, right? The largest or the more distinct hits are probably going to be in the equity areas that are closer to the fray. Those that are more distant from the conflict will probably be a little bit more protected. So diversification is really important during this period. We do think that bonds hold a position in this environment. Even though yields may be rising a little bit, they tend to be more defensive in portfolios than the stock markets, and therefore holding up a little bit better.
Not to be pedantic, but when you say bonds, Jason, U.S. bonds?
Yes.
Okay. I just had to check.
Bonds, U.S. bonds, municipal bonds, across the board. You see rising rates, and you may say, well, that means there's downside in those items, but it's not the magnitude of downside that you're seeing in equity markets. They have a more stable nature, even in worse scenarios. They tend to be more stable than stocks are.
What about defensive stocks? And I don't mean defense contractors, but do you find anything valuable there as a defensive play within equities?
Absolutely. It makes sense to own things like pharmaceuticals and consumer staples in those environments, particularly when the markets are gyrating more. Those tend to hold up a little bit better in these environments. And then the other thing to consider is just the flow-through effects, right? The flow-through effect of an increased conflict in the Middle East has that impact on oil prices, the impact on inflation. It probably means rates a little bit higher on the margin. And it probably means an interest in more commodity-based items, whether it be oil, gold, or even energy equities as a defensive way to play against this rising conflict.
Jason, you and I were joking a little bit earlier that it's hard to believe that this week started off with trade talks between the U.S. and China because it feels like a million years ago. But having said that, the trade deals that we've gotten, I say deals with quote marks here, the U.K. and China, you say that it's pretty informative for investors in terms of showing what the range of outcomes could be.
We think so. So, look, I know we're all saying these are deals because they're all very verbal in nature. There's very little that's put on paper. But at the end of the day, this is actually what a lot of our policy analysts have been saying that is going to be the way this works. You can't just suddenly turn around and have a deal signed in paper after all this has been done. It takes some time to get there. So the initial step is the verbal agreements. The next step is things like memorandums of understanding between the negotiating parties, and then later a deal comes. Now, the UK deal and the China deal kind of put bookends on what we could possibly expect from these deals. Think of UK as one of our closest trading partners, and China as being one of the ones that we have maybe a more adversarial relationship with. So to see them both strike some tentative deals and put some contours around what those deals are gives us an idea of what the range of possibilities are for those countries negotiating with the U.S. And that has actually kind of shrunk the range of possibilities of the outcomes in these trade negotiations.
All right, Jason, got to leave it there. Have a wonderful weekend. Jason Pride, Chief of Investment Strategy and Research over at Glenmede, with about 437 stocks in the S&P 500. Scarlett in the red here on the day, wiping out what had been modest gains on a weekly basis.
Yeah, absolutely. The S&P 500 now down 0.5%. The Dow falling even more, 1.4% decline. And the NASDAQ down 0.75%.
The Russell 2000 down about 2% as the riskiest corners of this market are being sold off. Yields, believe it or not, are higher. A full breakdown of all of today's market action, that starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu, taking you to the closing bell with a global simulcast, and it starts right now. Carol Masser and Tim Stenovic join us in the radio booth. Alex Steele has the day off. Welcome to our audiences across all of our Bloomberg platforms, television, radio, and YouTube. A day where a lot of folks, Carol Masser, looking past relatively solid economic data on that UMich consumer sentiment data, and of course, looking to what happened last night and what is still transpiring over the skies of Tehran and Tel Aviv.
Yeah, the headlines fast and furious over the last couple of hours. That's continuing to put support when it comes to oil prices, and that's something we're all watching right now. I'm looking at WTI crude still up about 7.5% off its highs of the days, but nonetheless, we're looking at $73.12 a barrel.
I think everybody's trying to figure out what Prime Minister Benjamin Netanyahu means by saying that more action will be taken. In the past, these so-called skirmishes have kind of been a tit for tat, and this was maybe seen as the tat, Iran's response. But if there is more to come, then how much does this escalate?
Right, and that might be why Treasury yields are moving up. You see, it's interesting given that you would think that there would be a big shift to the safe haven of U.S. Treasuries, but that hasn't played out because everyone's still worried about the inflation ramifications of spiking oil prices.
Absolutely, and it gets to this idea now of how do you weigh the multitude of risk. We came in, of course, talking about trade risk into this week, and that seemed to have abated at least for a brief moment in time, and now the geopolitical risk back on the table. Do you trade into this weekend? Do you sell off and put everything away and then just wait to find out what happens over the weekend?
Yeah, it's a tough position right ahead of the weekend. So much could happen, and time will tell ultimately how it plays out here.
A lot to break down here as we get the closing bells in New York. Earlier in the session, it did look like we were at least going to hold on to some of those weekly gains, but that is not necessarily going to be the case. The Dow Jones Industrial Average on the day down more than 700 points, or about 1.8%. That gives it a weekly loss of about 1.4%. The S&P down 68 points, closing back below that 6,000 level, a key psychological level there, and down 0.5 percentage point on the week. The NASDAQ Composite down 255 points, or about 1.3% on the day. The NASDAQ 100 down a similar amount, and the Russell 2000 closing lower by about 40 points, or 1.9% on the day.
No surprise, Romaine, as we've seen increasingly that risk-off trade play out throughout the day, that we are seeing most names in the S&P 500 lower, 433 to the downside, Scarlett, on this Friday, 70 to the upside.
And a pretty clear-cut IMAP as well, showing the sector performances. Energy, the only sector within the S&P 500, finishing higher, up 1.7%. And for the week, also the best performer, gaining 5.7%.
All right, let's get to some of the individual gainers, if I may. And, kind of holding my breath to see if they held on to their gains. No surprise, I should say, to see defense names, which we have seen trade higher throughout the day. This is one of the few groups with some outperformance, and that included Lockheed Martin. We've seen this one up more than 4%, finishing the day with about a 3.7% on those escalating tensions between Iran and Israel. Let's also go to energy names, which have definitely obviously been on the move, really rising riding the ride up in oil prices. We see Diamondback Energy, ticker is FANG. That name is up about 3.7% in today's session. Keep in mind that there is this debate in the analyst community in terms of what will happen with oil prices and where the ultimate landing point is for crude oil, because there's no impact yet on oil supplies, but that is something we're watching very, very closely. And we know that the Energy Secretary, Chris Wright, is doing the same as well. We just heard from him a tweet on social just moments ago. Oracle, got to mention this one. This has been on a tear, guys. 7.7% to the upside today. Second day of big gains. It gained more than 13% yesterday. We had earnings late Wednesday. Company projected a 70% gain in cloud infrastructure sales this fiscal year, so it gave a bullish outlook for what is a very closely watched business at the company. Stock is up almost 30% year to date and trading at another record high. And it's up more than 70% since April 21, excuse me. And I got to just mention one more. I'm amazed that I've got these strong gainers. Also, we're looking at RH, formerly Restoration Hardware. This one, some outperformance in today's session, up as much as 25%, finishing the day with a gain of about 7%. It kept its outlook for the full year unchanged. And so there have been some concerns about the impact of U.S. tariffs in a weak housing market. But this company definitely surprising investors to the upside. Tim.
All right, well, to the downside, no shortage of companies to choose from. I want to start with shares of Visa, fell 5% today. This after the Wall Street Journal reported that large merchants, including Walmart and Amazon, are exploring how to issue or use stablecoins to bypass the traditional fees of card-based systems. So, of course, if this were to happen and these large retailers were to no longer use these credit card companies as much for those transactions, then those transaction fees would go down and these companies would struggle. MasterCard, by the way, fell by 4.6% today. Also, Adobe, we're talking earnings here. The company shares fell 5.3% today. The company did give a sales outlook for the current quarter, kind of failed to calm investors who've been skeptical about Adobe's ability to compete with AI-focused startups. The company's CFO reported that the company's family of AI models, though, has been used to generate over 24 billion pieces of content. The company expects $250 million in annual recurring revenue from AI products. Once again, shares down 5.3% today. And finally, looking at airlines as a whole today, this is the S&P 500 passenger airlines index. It fell 3.7% today. Airline stocks declined around the world after Israel launched airstrikes across Iran. What it did was it forced several countries in the Middle East to close their airspace to commercial flights. Here in the U.S., Delta and United suspended flights to Tel Aviv following Israel's bombing of Iran and the closure of that airspace. United has not said when flights between Newark and Tel Aviv may resume. In the past, carriers have been forced to use these narrow flight corridors more often due to military conflicts around the world. What that does is it adds fuel costs, makes flights longer, it disrupts schedules, and leads to higher operating charges. That index falling by 3.7% today.
All right, let's take a look at what happened in the yield space. Yield's actually higher. Scarlett was talking about this just a second ago, pretty much across the curve, 4 basis points on the lower end, shorter end of the curve, and about 6 basis points on the longer end of the curve. Though we should point out on a weekly basis, yields are lower than where they were last Friday, about 8 basis points lower on the 2-year and 6 to 7 basis points on the 30-year. And of course, that is the setup for that 2-day Fed meeting that kicks off on Tuesday.
You know, that's exactly where I wanted to go, Romaine. I mean, I'm just thinking about what is being handed Fed Chair Jay Powell and company as they get ready to kick off that meeting and then talk about kind of the macro environment, whether or not they take a dovish tilt possibly. And I guess some of that has to do with how long this conflict goes on.
Well, Julie Beal over at Cain Anderson Rudnick, we just had her on our program, and she said the higher oil prices, the spike in oil prices that we're seeing right now, which obviously is inflationary, could complicate the Fed's task next week in terms of thinking about that rate path and those rate path moves. That's inflationary. So if we're seeing price pressure there, then that's certainly an issue for rates.
Yeah, it's going to be a game day decision because there's a lot of time before that Wednesday decision, and a lot could happen in the Middle East. The other thing to keep in mind that we have going on this weekend is the G7 meeting, and some analysts have talked about maybe there might be some trade talks that come out of that meeting where the U.S. gets together with another country and we get closer to some kind of concepts of a plan or trade deals.
I'm glad you brought up the G7 because I do wonder if the dueling attacks today, if that changes maybe what the conversation is going to be about. I mean, we all pretty much assumed going in it was all going to be pretty much about trade issues, but you do wonder now if they have to focus a little bit more on global security.
Yeah, no, let's not forget too that the United States and Iran were supposed to meet this Sunday for another round of nuclear talks in Oman. So we haven't really heard anything in terms of whether or not that's going to continue to go on. We know we've heard from various states in the region that have criticized the activities that have gone on and saying Israel's actions were reckless. But
we should point out too that the Iranian foreign minister apparently had a call with his Indian counterpart and basically told him that right now those negotiations, any negotiations they were having with the U.S. Are not happening anymore.
Yeah, also, we should note that a few more headlines dropping from a Fox News report that cited a White House source that it didn't name. The president and Netanyahu spoke by phone, according to Fox News, and the Trump administration also briefed lawmakers before those Israeli strikes. I think the question I have is, what happens over the weekend here, and to what extent do we see this escalate?
Well, one thing I'm curious about, and we had, Scarlett and I had John Bolton on a little bit earlier, and I don't think we had a chance to really ask him this, but also the idea that apparently this was something carried out without the U.S.'s direct, foreknowledge, I should say. At least that seems to be the implication and the reporting, though the U.S. did confirm that they did assist in some of being able to block some of those missiles coming in from Iran. But it raises the question as to whether Netanyahu went at this alone or whether he did get the backing of his number one ally.
Yeah, for a change, the U.S. is not the source of the uncertainty that all the investors in the world have to grapple with. So it definitely does create a new dynamic for investors to kind of price through.
Yep, and raising a little bit of volatility, certainly in the trade. We'll see whether or not that carries into also the trade next week. All right, guys, that's a wrap. A super, super busy Friday, and it's playing out in the markets. That is a wrap on our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. Have a good and safe weekend, everybody. Those guys continuing on TV, Tim Wright and I continuing right here on Bloomberg Business Week Daily.
And our coverage continues here on Bloomberg Television. We are continuing to monitor the developments in the Middle East, watching for potential escalation, and of course, bringing you any updates from world leaders as we get them. We're also going to, of course, talk about the market impact and talk about now the diplomacy that, at least for right now, seems to be a void. That's coming up next here on The Close on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Israel strikes on Iran overnight, rippling across financial markets worldwide, including here in the United States of America. The S&P 500 that had been holding that 6,000 level, closing today below it, down about 1% here on the day, and on a weekly basis, down about 0.5%. The riskiest corners of the market were sold off even heavier. That includes the Russell 2000, a flight to safety, probably most emblematic through the Swiss franc. 0.1% gain on the day may not seem like much, but the strength that we've seen there on a weekly basis and on a year-to-date basis has been phenomenal. Another week where we see the dollar on the back foot. Gold at one point, it actually did close, spot gold did close today at a fresh record high. Yields, though, moved in a different direction than I think what a lot of people would have thought here. But of course, a lot of that has more to do with inflation and what the Fed might do next week. We talk about some of the individual movers and the impact of that strike in Iran, and of course, the retaliation by Iran into Israel. Most stocks in the travel and tourism space did go down. That includes Carnival Cruise, down significantly on the day, and the airline stocks also moving lower. To the upside, no real mystery there. You saw defense contractors like RTX and LMT get a bid, and you saw oil and gas stocks, particularly in the infrastructure space, also move higher. 5% on APA and Zim Integrated. Keep an eye on shipping stocks, particularly in the freight space. Of course, any prolonged conflict could see freight rates go up, and of course, that would benefit those names. And that brings us to our top story for the next hour, and that is the uncertainty and unpredictability of the geopolitical landscape. Now, what just happened over the past 24 hours is probably less important than what happens over the next 24 hours or 48 hours or 72 hours and beyond, and more importantly, how it affects global markets. In a worst case scenario in which Iran takes the unprecedented step of shutting down the Strait of Hormuz, oil could go back above $100. And that potentially creates a ripple effect throughout the global economy, and it could change the path for central banks from Europe and right here in the U.S. An even worse case scenario, of course, is an extended military campaign, a barrage between Iran and Israel that goes on for days, weeks, or maybe even longer. That could potentially grind global trade to a near halt. Global trade that was already in disarray because of the U.S. tariff threats. And then, of course, there is a better case scenario potentially, that diplomacy does actually come back, that these skirmishes, these volleys of missiles and drones only last a few days. The G7 set to meet in Canada in just a matter of hours. The drama, of course, this Friday caps a volatile week for markets, a week for equity investors that ended on a defensive tone. Cain helps to lead our coverage at Bloomberg Intelligence. Here for our Factor Friday, a much different Factor Friday here. And I do want to start off with sort of the defensive nature, at least on this Friday that we saw. But that was a defensive nature to the trade that had actually been playing out even prior to the strikes that we saw in the Middle East.
Yeah, it's been all year, Romaine. And if you're not, watching the factors, it would be easy to see the markets doing decently well, but there is a defensive tone underneath. So, we did recently update our factor outlook for mid-year. I'll just give you the broad strokes. There's a lot to go into it. But from a performance perspective, like you said, it's those defensive factors that have been working. Low volatility, quality, momentum's kind of going nowhere. Value has not worked. As you know, one of the things that we cover is the valuations of the factors. So what we do is we look at the median valuations of the long side versus the short side. Quality is the most expensive factor. Momentum and low volatility are also very expensive. Value is very cheap, very, very cheap. We look at the profitability of the factors. Again, those defensive factors, momentum, quality, low volatility, have very high profitability.
Well, you mentioned profitability. I mean, we were talking with a couple of market guests earlier in the program about sort of what is defensive within equities. And naturally, a lot of them talked about cash flow and profitability. You take a close look at that profitability factor. What are you finding?
Yes. So profitability is really the main component to our main quality factor. Like I said, quality is doing the best this year. Very expensive, but very strong. But we did a little bit of a twist on the traditional profitability factor recently. So the traditional profitability factor is going long high profitability stocks, like high ROE stocks, cheap or short the opposite to that. Well, what we did was we looked at the relative profitability. So we looked at the profitability currently, the ROE currently of a company compared to its average 5-year ROE. So essentially what you're doing is looking at improving or not improving ROE companies. That factor is actually up 20% over the last year. So those improving ROE or improving profitability companies have really been a market driver.
Just real quickly, when we get sort of events like what transpired over the last 24 hours, does that have a significant impact on the short term on these factors or not?
Of course it has an impact, but there is a couple of techniques to at least mitigate it, right? One of the things that we do is what's called sector neutralize our factors. So without getting technical, you're just not betting on one sector overly. So when big things like this happen and there's big moves in defense stocks, et cetera, right, you're not overly exposed to any one sector, which at least gives you some cushion.
All right, Cain of Bloomberg Intelligence here with our Factor Friday. A closer look, of course, at how geopolitics folds into all of that. We keep the conversation going right now as we look ahead to Monday and what the markets will maybe have in store. Callie Cox is the chief market strategist with Ritzholtz Wealth Management. And Callie, this is a perfect day to have you because we kind of talk a lot about this idea, particularly since the start of the year. With all of the issues with trade and geopolitics, a lot of investors not wanting to be exposed heading into a weekend, but then maybe they come back on Monday or Tuesday and decide, okay, after the sell-off, maybe you come in and you buy that dip. What is the general sentiment right now that you're seeing?
Well, I think the general sentiment is easy to sum up today. I mean, investors are nervous, right? We have this geopolitical conflict going on in the Middle East. There are a lot of questions around escalation, if this is the start of something bigger, what that could mean for oil prices. I mean, I think investors are at the point where they're just reading headlines and trying to process what's going on, shooting first and asking questions later. And the fact that this is happening on a Friday just exacerbates that because nobody wants to be holding risk going into the weekend.
I'm curious, though, also, when we talk about this risk, I mean, everyone was looking to see the impact of that risk in the economic data. At least for right now, it hasn't shown up. They were looking for it in earnings, and we just came out of our earnings season. I know some companies got dinged by tariffs and a few other things, but on the whole, things held up pretty well. And I do wonder if that foreshadows something better ahead, or are we just kind of whistling past the graveyard?
Well, of course, today changes things. I mean, oil prices did pop the most in 3 years today. I don't know if that'll be sustained, but I do think that there's this new dynamic around if oil prices do stick to their highs that we saw today. But to your point, Romaine, I mean, economic data has been surprisingly resilient. I wouldn't necessarily call it good. We've seen some pretty noticeable deterioration in some jobs-related data, mainly hiring and continuing claims. But it has been better than expected, and investors were positioned for a crisis back in the middle of April. And conditions, of course, trade policy has loosened up quite a bit and economic data has held up. But that doesn't necessarily mean that economic data and earnings hold up over the next few months. And I think everybody is kind of whistling past the graveyard, trying to, understand if there are cracks when they're going to show up.
So when we talk about the catalyst for this market, and I guess I'm thinking a little bit more long term, and I know ultimately it's just all about, corporate fundamentals and, economic stability, if you will. But everyone's sort of looking, at least heading into this week, kind of where's the S&P going to reclaim that record high and what would get it there? There's not much out there on the calendar. We know the Fed's not going to do anything next week, and earnings season is pretty much over until mid-July. So what becomes the potential upside catalyst, Callie?
Well, look, I think this is a sentiment-driven rebound, so it could be sentiment that drives us back above the highs. I don't think that's necessarily a bad thing. I think it shows how off-center investors got in the middle of April and how underallocated, especially professional investors, were toward the bottom of that sell-off. But the fact that, sentiment could drive us to new highs doesn't necessarily mean that we're sitting on a strong foundation here. The fact that economic data is weakening, the fact that earnings expectations are coming down, yes, we can reclaim that high. That's a psychological victory. But at the same time, does that make me more encouraged about the months and potentially the rest of the year ahead? I'm not so sure, especially given the trends we've seen.
When we were talking, I think the last time we talked a little bit about this idea of people U.S. investors looking for opportunities outside of U.S. assets. And I know we did see a little rotation in equities and to a certain extent a rotation in the fixed income market as well, and obviously a huge rotation out of the dollar. Do you think that persists, or is that just sort of a niche corner, if you will, of the trade?
That's a really good question because I bet you're going to get 1,000 different answers.
Okay.
I think if it does persist, it's a slow drip kind of trend. We can certainly see it happening. I think a little bit of it happened during April, especially when we saw bond yields go up while the dollar was falling. And look, you have to realize that a lot of investors, especially in treasuries, a lot of foreign investors are holding on to duration. So you're going to see that impact in the longer end of the curve. That's an extra risk you have to consider if you're managing money. So I don't think you see it on a day-to-day basis necessarily. I think a lot of that fluctuation has to do with inflation and the deficit. But I think over time, if you see bond yields creep higher, especially on the long end, you can attribute that to a general loss of confidence in the U.S.
All right, Callie, really appreciate you taking time for us, as always. Callie Cox, Chief Market Strategist over at Ritzholtz Wealth Management. Now, of course, we do want to go back to the developments in the Middle East. We should point out almost midnight in Tel Aviv, past midnight in Tehran. We have been hearing from a slew of world leaders here as we monitor those developments. Israel President Benjamin Netanyahu just moments ago spoke about the situation.
In the past 24 hours, we've taken out top military commanders, senior nuclear scientists, the Islamic regime's most significant enrichment facility, and a large portion of its ballistic missile arsenal. More is on the way.
Joining us right now is Joe Cirincione, Vice Chair of the Board of Directors of the Center for International Policy, and a lifetime of experience when it comes to foreign relations. And Joe, my first question to you is really why Netanyahu chose to attack now.
Well, Benjamin Netanyahu has wanted to attack Iran for a very long time, over 20 years. It was back in 2008 that George W. Bush had to back him down from his first effort to get U.S. support for a war with Iran. President Trump apparently tried to back him down and failed, and that's why you see Netanyahu attacking now. He calls this a preemptive attack, but it didn't preempt a war. It didn't preempt an Iranian dash for the bomb. That wasn't happening, nor was it likely to happen. What it did preempt was a possible diplomatic solution to this crisis. The U.S. and Iran were very close, as President Trump has said, to a pretty good deal. It's Netanyahu blew that out of the water. There's no chance you're going to get anything like that in the weeks or months ahead.
Well, that's what I'm curious about. If there was not an imminent threat, military threat to Israel, and we know, I mean, Netanyahu has been very vocal about his opposition to a new U.S. brokered Iranian nuclear deal. What does this accomplish? I mean, Iran has already come out and said that, assuming that its facilities can survive this barrage, that they plan to move forward now with their nuclear program.
Well, you know, I have great sympathy for the concerns of the Israeli people. I have family in Israel. We just checked in with them today. Their kids are sleeping in the safe room where they'll be protected in case of a missile attack. And Israel has been brilliant in its tactics in the past couple of years. Look at the initial strikes on Hamas. Look at the devastation they inflicted on Hezbollah, or the brilliance, really, of this decapitation strike against some 20 or more military leaders that they conducted yesterday in Iran. But they've been very dumb strategically. You know, what is the end game in Gaza? How does this end? Or with Lebanon, or with Tehran? Where does this go? Bibi Netanyahu seems to indicate, particularly with his comments today, that what he seeks isn't so much an end to the nuclear program, but an end to the regime. This is a regime change campaign. He's encouraging the Iranian people to rise up and overthrow the regime, but that is a risky game. Yeah. I mean, this is an unpopular regime. They could fall. What's going to replace it? It might be the people with the guns. That's the Revolutionary Guard. And that could be a whole lot worse than what you have at present.
Well, that's what I'm curious about, too. And you have spent a huge part of your career advocating for non-proliferation of nuclear weapons. I mean, we know, at least publicly, we know that Iran has a certain capability with regards to its uranium enrichment. If the current regime were to fall, what options do we have to make sure that whatever uranium, whatever actual warheads that they might already have that we don't know about can be secured by responsible actors?
Right. You have no assurances outside of a negotiated agreement. And that's why you hear even people who support the war saying this has to end with some kind of negotiations. The U.S. or Israel can't go in and occupy Iran. They can't take it over the way they did Iraq. It's too big, it's too strong, it's too spread out. So you have to have some kind of Iranian leadership that's willing to cut a deal, whether it's this leadership, what replaces it. And so that's why this has got to end around the negotiating table, not on the battlefield, but that's not going to be happening for months. So that's the dilemma your investors are facing. Yeah. There are just major uncertainties. Nobody can predict which way this is going to go.
And we talk about just sort of the idea, of course, we know Israel's military capabilities, and obviously they have the #1 ally in the world, at least when it comes to military capabilities in the United States. Does Iran have any true allies?
Not anymore. I mean, they did have allies they were supporting, the Hezbollah, Hamas, the Yemenis, so some forces in Syria, Iraqi militia, but nothing like a state ally that can help it. Russia is allied. China is allied in partnerships with Iran, but they can't provide the kind of military equipment that the United States has been giving to Israel very generously over several decades.
Real quick, Joe, we only have about a minute, but I am curious as to who could actually be the power broker in all this. If it's not going to be the U.S. president, I mean, who is that neutral party that can sort of stand between Netanyahu and the Ayatollah in Iran and actually broker some modicum of peace, if you will?
Well, you know, Oman has been the broker for the talks. And so even though it's a small country, don't underestimate their capability. But it really would have to be something like Saudi Arabia cooperating with Iran, with Oman, rather, and the UAE to come in. You know, back in 2014, the last time we faced the possibility of a war with Iran, Saudi Arabia wanted the war. MBS said cut off the head of the snake. This time around, the Arab monarchies don't want this war. They have been condemning it. They finger Israel to blame for this war, not Iran. So that they could play a role. They would have to be the most powerful peacemaker that could come in and strike a deal.
All right, Joe, we have to leave it there up against a commercial break. Really appreciate you taking time and just appreciate really your wealth of knowledge on this topic. Joe Cirincione, he is the vice chair of the board over at the Center for International Policy. You're watching The Close on Bloomberg. All right, we want to reset a bit and go back to talking about the world of finance, specifically when it comes to the world of sports and finance. This is a big week for sports fans and for investors alike. The Indiana Pacers and Oklahoma City Thunder, they're going to go head-to-head tonight in Game 4 of the NBA Finals. Meanwhile, right here in the United States of America, the FIFA Club World Cup kicks off in Miami. And of course, that's ahead of the big World Cup next year in 2026. And just yesterday, we heard that the Chicago Bears are considering selling a minority stake that belonged to the late Andrew McKenna. Joining us right now to talk about what's going on in the business of sports is the founder of Park Lane. His name's Andrew Kline. He's a former lineman for the St. Louis Rams and has now become a big investor in the sports space. Andrew, great to talk to you. I do want to talk about these eye-popping valuations because we were kind of joking earlier this year. I can't remember who it was, but there was a big sale in the NBA and everyone said, oh my gosh, that is just absolutely bonkers. And then like 2 weeks later, the Celtics topped that out and then you had a big deal in the NFL. When you look at the valuations and the huge run-up that we've seen in them, particularly in major U.S. sports, what do you think is actually driving that?
Well, it's several things. And obviously that all comes down to supply and demand. One is, traditionally the networks had sitcoms and all types of different content that, had a lot of demand. And nowadays, the most important thing that you're seeing on television that is, quote unquote, TiVo proof is sports. The other thing is private equity has been allowed in. And what I would also say is that, when I started Park Lane 21 years ago, the business of sports was almost like a high school or a college team. And now the business of pro sports is a professional team. Mm-hmm. So just a confluence of demand all the way around is driving this.
Well, we've seen, of course, the NFL loosen its rules with regards to private equity companies and taking minority stakes. You talk about sort of the second tier, if you will, for lack of a better phrase, once you get beyond sort of the dominant sports leagues in this nation. And for the last few years, we've seen huge investments coming into things like lacrosse and volleyball, pickleball, 3x3 basketball tournaments. Things that I think in the past you would have just, they would have been on, ESPN, the Ocho, and now they're kind of front and center with a lot of money chasing after it.
There is a lot of money chasing after it, and the reality is that it's very, very difficult. For every big three league, there are also hundreds of leagues that tried to start up and are failed, and there's a graveyard of those. So the reason that there's a lot of value in these things is they're so difficult to start. But a lot of things have been democratized nowadays because of technology and media, and sports is one of those things. So now you don't just have to be on network to be a successful sports league. Sinclair Broadcast, for instance, just launched a partnership with pickleball, and now they're able to share pickleball with the world very differently than you would have even 10 years ago.
So, what you've done over at Park Lane, you guys have made dozens and dozens of investments in this space. What exactly do you look for when you are looking for something new to invest in?
Well, in sports, the league is very important. So some leagues that you invest in, they're just going to increase in value no matter what. They're, with the NFL being the top of the food chain, and I know I'm a little biased because I used to play in the NFL, but the reality is that is the strongest of all of them. So when you're in the major leagues, the league itself is important, the market itself is important, and then you go down from there, management, and there's several factors there. We also do a lot of transactions where we're advising on the transaction itself. Mm-hmm. So a lot of investors, when they're investing in these things, when you're looking at private equity, they're looking for return. But there are people out there, and we've represented many of them, who It doesn't matter what it costs, and it doesn't matter what they lose. Since they've been children, they've wanted to own this asset, and there's only one of these assets in the world. And many times when people are buying these things, certainly in the before the last few years, they were buying it because it was a realization of a life dream, and less so about returns. And now you're seeing returns be a little bit more important in the equation.
Does that change how these teams and more importantly the leagues are run?
Absolutely. I'll give you a great example. When we first started working on deals, if you looked at an NFL team, they had to have on average 150 to 250 executives and probably around 20 to 25 trainers and coaches. If you went to Europe, they would have on average 100 coaches and trainers and maybe 5 or 6 people running the business. Because in Europe, in order to make money, you have to win games. So all of the emphasis was on the trainers and the coaches. Now when you go to Europe, there are 100, 150 people running the business and still the 100, 150 trainers and coaches. And the people in the US that are running these things are less sort of ex-athlete who worked their way up the system and people who are now MBAs and quants, and the same way that you'd run a hedge fund, the same way you'd run a Fortune 500 business, the same way you'd run a Silicon Valley startup is how these sports teams are being run now.
Also, what I found interesting, too, about some of the way that teams and leagues are adjusting, I mean, it's not just about selling what's on the floor so much, or the field, if you will. It's really also about keeping fans engaged in the off season, a lot of merchandise, a lot of intellectual property. I am curious as to how far you think that can go.
Well, the biggest driver is still to media, premium sales, and then sponsorship. It just depends on the team and it depends on the market how far you can take the licensing and the other things. But in these past few years, teams are getting extremely creative with that. Also, if you own a building, you might have your main team in there, but economies of scale is I own the building, so let me own a couple other teams that I can throw in that building and add event dates. And then you see other people coming in. Legends, Oakview Group, and some of these other operators who come in and are helping these teams to monetize and professionalize the operations in ways that you just didn't see 15, 20 years ago.
All right, Andrew, really fascinating stuff. We've got to get you back on to talk about it. That's Andrew Kline. He's a former NFL lineman who about 20 years ago went on to start his own investment fund there called Park Lane. All right, let's take a look at how the markets close here on the day. We talk about a market that came into today holding on to weekly gains. There was still some concern about trade, still some concerns here about the geopolitical situation. And of course, all that changed over the last 24 hours. The S&P finished lower by about 1% on the day, and that wiped out all of its gains on the week. You saw even bigger downdrafts in the Russell 2000 and some of the economically sensitive sectors. A flight to safety with the Swiss franc being one of the primary vehicles for that, as is gold. Gold at 34.32 and change. That is a record high. This is Bloomberg. Let's go back to the top story of the day. World leaders reacting to Israel's strikes across Iran, targeting those nuclear facilities. The British Prime Minister, Keir Starmer, he actually sat down with their very own Mashal Hussein and is calling for a de-escalation in the conflict. Here's what he had to say.
Well, I'm very concerned about the situation that is developing, and it's obvious that for a long time we've had grave concerns about the nuclear program that Iran is putting together, and we absolutely recognise Israel's right to self-defence. We, the UK, were not involved in this attack, and we're urging all sides to de-escalate and negotiate as the way forward here. And obviously we're talking to allies about that. We have been this week. We are intensively talking to allies today.
In March, US national intelligence made it public that they did not believe Iran was developing nuclear weapons. So has something changed in the assessment since then? Well,
I won't go into the intelligence assessments, but we are gravely concerned. I just had a call with President Macron and Chancellor Merz to discuss the situation. and we are all on the same page in the sense of saying, look, the nuclear program is a real cause for concern.
And that was British Prime Minister Keir Starmer sitting down for an interview a little bit earlier in the day, of course, addressing the topic at hand. A lot of world leaders now weighing in on the situation, at least for right now. Things are somewhat calmer after midnight in both Tel Aviv and in Tehran, but a lot of big questions about what comes next. James Jeffries, he was a former U.S. ambassador to Iraq and Turkey and is now the Middle East Program Chair at the Wilson Center, and he joins us right now. Ambassador Jeffrey, really appreciate you joining us here. I am curious as to whether there actually is a diplomatic path forward based on what we know right now.
Not at this point, but also thank you for having me on at this very critical time. Not at this point because Iran was given, from every indication, a really good deal by President Trump to even continue for some time, it was unclear, enrichment in order to end this crisis. And the Iranians instead, as you've just reported, accelerated their enrichment dramatically, such that the board of the International Atomic Energy Agency, for the first time in 20 years, told the Security Council this is a real danger. And we do think that they were accelerating their weaponization. I know about the U.S. intelligence report, but the Israelis believe differently. And I think there are indications that we may be underestimating what they were doing.
We don't, of course, have all the details as to the damage that those Israeli strikes had on these various nuclear facilities and ballistic missile sites. There is talk that at least one of the uranium conversion facilities did take some pretty heavy hits. I am curious as to what more would need to be done on the military side, if that is the only option, by Israel to completely neutralize the threat of those various sites.
You can never neutralize a threat and be sure that it will stay neutralized forever. The Israelis totally destroyed the Iraqi nuclear facility at the beginning of the 1980s. By 1990, we discovered, after the end of the Kuwait War, that they had largely reconstituted it. So the Iranians can rebuild from scratch, but it will take them a long time. If the Israelis can succeed not only in the Natrans enrichment site, which they did hit, and apparently from the latest reporting was successful at, but at the Fodro site at Qum, which is under a mountain. That will require some very dramatic steps by Israel that Israel has not taken yet. We'll have to wait and see. They've shown themselves to be extremely clever and have an extremely large, if you will, portfolio of military actions that they're employing. They are in this thing for real, and they're all in.
I am curious as to how much, assuming that the military action cease and Israel is satisfied with whatever they were able to sort of take out, how can we trust the Iranian regime that there won't be a quick rebuild of some of those facilities and capabilities?
We can't. And therefore, the final solution, frankly, is, as Prime Minister Starmer said, is a negotiated settlement. That would require Iran to give up enrichment. It has no right to enrich now that we have, or the Israelis have, but we've all seen them, a whole warehouse full of weaponization materials. They were intent, and they still are intent on getting a nuclear weapon. If Iran gave that up, and if Iran would finally make peace, or at least stop saying its national goal is to destroy Israel, then I think you could have a solution. But if not, I think the Israelis are just going to keep pounding them.
Can we do that without, I guess what I'm trying to get at is this idea, Ambassador, of whether that can be done without any presence by foreign militaries within Iran's borders?
I think it can be. I think that we can rule out American forces being deployed in places. I've been deployed as both a soldier and a diplomat for 7 years in Iraq, Syria, and Vietnam. And this is not a winner for the American people, and it doesn't really succeed on the ground either. And the Israelis are experiencing the same thing closer to home in Gaza. So I think it would have to be inspections, but also a real change of heart of the regime. The analogy It didn't last, but it was fine when it did last, was Gorbachev and the shift in the Soviet Union and later Russia.
Yeah.
If we can get something like that from Iran, that would be the way to stop this action. But right now, ever since, frankly, the 7th of October, 2023, the Israelis have decided they can't risk having these kind of threats in the region, because when they're not looking, they could take another devastating blow, and they're right.
And one of the reasons why we wanted to speak to you, of course, is because you have had a firsthand look. Of course, the dissolution of the Soviet Union. You were serving, I believe, in Germany at the time. Obviously, the reimagining of Iraq, Kuwait, etc. It gets to the question of who the power broker would be in all of this. If it's not the U.S., do you think that we need to see more involvement by some of the Middle East neighbors, whether it's the Saudis, the Omanis, someone who can be trusted by the world and, more importantly, trusted by both Israel and Iran?
It's always good to have partners. The watchword since our disasters in Afghanistan and to some degree Iraq has been by, with, and through our partners. But at the end of the day, and we see this in Europe even more with Ukraine than we do right now in the Middle East, nothing works in this world without U.S. leadership. That's not 500,000 troops on the ground. That's not us getting in a war necessarily. It means engagement. Now, I will say on the Middle East, everybody is giving the Trump administration pretty high marks. For certainly, they haven't pivoted away. They've got 2 aircraft carriers either in or close to the region, and they're very engaged in Syria, in Gaza, and now on the Iran front. We just need to do that. That's what every president has concluded since Harry Truman.
All right. Well, we really thank you for your time today. Always great to get insights out of somebody who really knows best. That's James Jeffrey, the former U.S. ambassador to Iraq and Turkey, now the Middle East program chair at the Wilson Center. And speaking of President Donald Trump, he is expected, of course, to go to the G7 meeting in Canada, which starts in a couple of days. And before that, he's going to preside over a big military parade in Washington, D.C., celebrating the 250th anniversary of the U.S. Army. Wendy Benjaminson helps to lead our coverage down in Washington, D.C. And the president, of course, has a full plate, a plate that might be changing just a little bit based on what transpired over the last 24 hours. I assume the president is still going forward with the parade, which is scheduled to kick off tomorrow, Saturday.
Yes, the parade is still on, weather permitting. There may be some thunderstorms, but everyone seems to think that they'll be able to do this through the raindrops. This is the first major U.S. military parade the U.S. has had in 34 years since George H.W. Bush ended the first Gulf War. That was the last time the U.S., displayed its military might. Previous military parades had only been to celebrate the ends of the Civil War, World War I, and World War II. It's just not something the U.S. does very often. Mm-hmm. And it's, I think for many people it's exciting. For many people, it's a little unsettling.
Well, yeah, and for a lot of people, we should point out there are numerous protests planned across the country, not necessarily directly at the parade itself, but in opposition to some of Trump's policies. And of course, we've all been wrapped by what happened in L.A. over the last few days and the deployment of the National Guard and federal troops. Wendy, I know we don't have a resolution to that, but has the White House articulated what the next step will be in dealing, in their words, with those protesters?
No. I mean, we have started now to see U.S. Marines guarding the entrance to federal buildings in Los Angeles. This is a shocking sight. There is that law, posse comitatus, that prevents the U.S. military from acting against Americans on American soil. The rub is, though, that there aren't that many protesters out there. It's a show of force by Trump without a major protest to back it up. There were pockets of some violence, some looting. No one has been killed. No one has been seriously injured, unless it has been by the law enforcement on the scene. And so it's an odd way of dealing with a protest that is around, but is sort of, simmering under the surface. Now, tomorrow, We are expecting at least 200 locations around the country, if not more, to host millions of people protesting the immigration policies that we saw carried out this past week in Los Angeles. Somewhat coincidentally with the parade, but they will be going on at the same time. Meanwhile, the U.S. is also, as your previous guest talked about, involved in these wars in the war now between Iran and Israel.
Just real quickly, we only have about 30 seconds, but I am curious with regards to those protests and how disparate they are. Do we have any sense as to whether federal troops would be involved in trying to contain that, or is this going to be primarily up to the local law enforcement to decide what they want to do?
At the moment, it will be up to the local law enforcement because the president has not said anything about deploying the U.S. military to these cities or seizing National Guard authority as he did in California. So at the moment, it will be local law enforcement if they get out of hand. But let's not forget that Americans have a right to peaceably demonstrate.
All right, Wendy Benjaminson, who helps to lead our coverage down there in Washington. Of course, all eyes will be on Washington, D.C. for that military parade on Saturday. And, of course, numerous protests planned across the country just ahead, of course, of President Trump's big trip to the G7. And all eyes, of course, still focused on what's going on in the Middle East. We'll be back in a moment. All right, let's set you up for what to watch over the next week, things that could potentially move the market, and that includes the G7 summit that kicks off on Sunday. It will be in full swing on Monday, and that comes on the same day that the Paris International Air Show was set to begin. Two big events that might be changed in a big way by recent developments this week, of course, with the attacks going on between Israel and Iran, and of course, that horrific plane crash by Boeing the other day. Also keep an eye on earnings. We are expected to get results out of Lennar on Monday. As we move into Tuesday, a big focus will be on U.S. retail sales and a big decision by the Bank of Japan on its interest rates. On Wednesday, the Fed gets its bite at the apple. Fed Chair Jay Powell is going to have to answer a lot of questions. No expectations for a move in rates, but a lot of questions to be asked, of course, about the potential direction of U.S. policy. We should also point out on that same day, we will hear additional Fed speak as well as jobless claims coming a day early. And that's because on Thursday, U.S. markets will be closed in commemoration of the Juneteenth holiday. We should also point out on that day, the Bank of England is expected to make a rate decision, and that deadline on that potential sale to TikTok is also scheduled for Thursday. On Friday, we do get more earnings, this time out of CarMax and Kroger. We're also going to get some retail sales out of the United Kingdom. We appreciate you watching us here on The Close. Stick around for Balance of Power. They'll have all your headlines on the situation going overseas.